11-year-old Warren Buffett stood on the floor of the New York Stock Exchange, a place that would become central to his future. It was 1942, and the world outside was embroiled in war, with nations clashing and economies in turmoil. But inside the exchange, a different kind of energy crackled, one of ambition, opportunity, and the relentless pursuit of financial success. Warren wasn't there for a casual visit. He was there to make his first foray into the world of investing. He'd saved up $120, a considerable sum for a boy his age, earned through various small ventures and savings. With his sister Doris by his side, he carefully selected their target. Cities Service Preferred Stock, a decision made after meticulous research and discussion. They purchased 3 shares for themselves and 3 for their sister Roberta, marking the beginning of their investment journey. A sense of accomplishment washed over young Warren, a feeling of having taken a significant step towards his dreams. He was no longer just observing the stock market, he was participating in it, feeling the pulse of the financial world. The stock dipped soon after their purchase, dropping below their purchase price, a moment of anxiety for the young investor. Warren, a bit rattled, held on, learning an early lesson in patience and resilience. Finally, when the stock climbed back up, he sold, netting a small profit, a tangible reward for his efforts. Little did he know, this small victory was just the beginning of a lifelong journey. He'd tasted the thrill of the market, and there was no turning back. The excitement of the financial world now firmly embedded in his heart. This early experience ignited a passion in Warren Buffett that would shape his life, driving him to learn more, to understand more. It wasn't just about the money. It was about understanding the dynamics of business, of value, of growth, and the intricate dance of the market. It was about the game itself, a game that Warren would master over the decades, becoming one of the greatest investors of all time. This moment on the floor of the New York Stock Exchange was the spark, the beginning of a journey that would see Warren Buffett become a legend in the world of finance. His early curiosity and determination set the foundation for a career that would be built on knowledge, strategy, and an unyielding passion for investing. The lessons he learned as a young boy would stay with him, guiding his decisions and shaping his approach to investing for the rest of his life. And so the spark of an investor was ignited, a spark that would grow into a blazing fire, illuminating the path to financial wisdom and success. Warren Buffett's entrepreneurial spirit bloomed early. Even as a young boy, he had a keen sense of business and a drive that set him apart from his peers. He wasn't content with just earning an allowance. He wanted to build something. His ambitions were clear from the start, and he was always on the lookout for new ways to make money. His newspaper route, far from a chore, became his first taste of business ownership. He treated it like a real enterprise, understanding that customer satisfaction was key to his success. He meticulously planned his route, maximizing efficiency and customer satisfaction. Every detail was considered, from the quickest paths to the best times to deliver. He didn't stop at newspapers. His entrepreneurial spirit led him to explore other ventures. He collected and resold used golf balls, hawked Coca-Cola bottles, and found innovative ways to turn a profit from everyday items, and even ran a pinball machine business. This venture in particular showcased his ability to see potential in unconventional opportunities. He saw opportunities where others saw only the mundane. His mind was always working, always looking for the next big idea. Each venture, no matter how small, honed his business acumen and instilled in him the value of hard work and smart decision-making. These early experiences were invaluable. His early experiences weren't just about making money, they were about problem-solving, about understanding customer needs, and about managing a small enterprise. He learned to think on his feet and adapt to changing circumstances, and about managing a small enterprise. These lessons were the foundation of his future success. These lessons, learned on the streets and in the arcades, would prove invaluable in the years to come. They taught him the importance of resilience and perseverance. They formed the bedrock of his practical, hands-on approach to business. He wasn't afraid to get involved and do the work himself. These early ventures showcased Buffett's drive and his knack for identifying opportunities. He had a natural talent for spotting potential where others saw none. He wasn't afraid to get his hands dirty, to try new things and to learn from his mistakes. Each failure was a stepping stone to success, and to learn from his mistakes. He understood that every setback was an opportunity to learn and grow. These were the formative years of a future business titan. where the seeds of his future success were sown. His vision extended far beyond his immediate surroundings, where the seeds of his future success were sown. These early experiences laid the groundwork for a lifetime of achievement and innovation. Warren Buffett's formal education in investing came at the feet of a master, Benjamin Graham. Graham, known as the father of value investing, became Buffett's mentor and greatest influence. At Columbia Business School, Buffett soaked up Graham's teachings, which emphasized identifying undervalued companies and investing for the long term. Graham's philosophy resonated deeply with Buffett's own instincts. He believed in thorough research, in understanding the intrinsic value of a business, and in ignoring the short-term whims of the market. This patient, disciplined approach became the cornerstone of Buffett's investment strategy. Under Graham's guidance, Buffett honed his analytical skills, learning to dissect financial statements, assess management quality, and identify companies with strong underlying fundamentals. Graham's influence extended beyond the classroom. He became a trusted advisor and friend, further shaping Buffett's investment philosophy and worldview. The lessons learned from Graham would guide Buffett throughout his career. He never wavered from the principles of value investing, even when they fell out of favor with the broader market. This unwavering commitment to his core principles would be key to his extraordinary success. In 1962, Warren Buffett stumbled upon a struggling textile company called Berkshire Hathaway. At the time, the company was on the brink of collapse, a shadow of its former self. The textile industry in America was facing significant challenges, and many companies were shutting down or moving operations overseas. He saw it not as a lost cause, but as an undervalued asset. Buffett, known for his keen eye for value, recognized that the company's assets were worth more than its stock price suggested. This insight was the cornerstone of his investment philosophy, buying undervalued companies and turning them around. He began buying shares, eventually gaining control of the company. His initial investment was driven by the belief that he could liquidate the company's assets for a profit. However, as he delved deeper, he saw a greater potential. What started as a textile investment would become the vehicle for Buffett's extraordinary investment journey. The textile operations continued for a while, but Buffett soon realized that the future of Berkshire Hathaway lay beyond textiles. Buffett gradually shifted Berkshire's focus away from textiles and towards insurance and other businesses. This strategic pivot was crucial. The textile business was capital-intensive and offered low returns, whereas insurance provided a steady stream of capital. He recognized the power of insurance float, the premiums collected upfront that could be invested for long-term growth. This float became a significant source of investment capital, allowing Buffett to make strategic acquisitions and investments. This steady stream of cash flow provided Buffett with the capital to make larger and more diverse investments. The insurance business, with its predictable cash flow, became the bedrock of Berkshire Hathaway's financial strength. Berkshire Hathaway became Buffett's investment canvas. He used the company as a platform to acquire a wide range of businesses, each contributing to the conglomerate's growth and stability. He acquired a diverse portfolio of companies, ranging from insurance giants like Geico to consumer brands like Coca-Cola and See's Candies. Each acquisition was carefully chosen for its potential to generate consistent earnings and its ability to operate independently. He favored companies with strong management teams, durable competitive advantages, and a history of generating consistent earnings. This approach ensured that each business could thrive without constant oversight, allowing Buffett to focus on strategic decisions. Under Buffett's leadership, Berkshire Hathaway transformed from a fading textile manufacturer into a global conglomerate with a market capitalization exceeding hundreds of billions of dollars. The company's success became a testament to Buffett's investment acumen and his ability to see value where others saw none. It became a testament to the power of patient, long-term investing and the genius of its chairman. Buffett's philosophy of buying and holding quality businesses for the long term has inspired countless investors and solidified his reputation as one of the greatest investors of all time.